Hello everyone, my name is Xin Yang, and our group members are Tao, Judd, and Yang. Our topic is explaining the earnings multiples for cafes. I will do the introduction. Tao and Judd will state the main body, which is about the definition of earnings multiples and analyzing details of our data. Yang will do the conclusion. Now let's get started. At present, small and medium enterprises operating in the market economy is bound to the reality survival of the fittest. How to improve the profitability of enterprises is the key to the sustainable development of enterprises in the fierce market competition. Profitable enterprises have the ability to expand the production capacity and lead the market. Starbucks is a good example. That is a U.S. coffee company, founded in 1971. In terms of product development, business management, or the expansion of sales channels, Starbucks is a successful model, which has become the largest chain coffee company with nearly 12,000 stores across North America, South America, Europe, the Middle East, and the Pacific region. It also has a unique profit model. They are good at broadening channels and actively collaborating with bookstores, libraries, supermarkets, airlines, hotels, and other enterprises. They also dare to innovate and grasp the second market. China launched T-series products, good service concept, focus on customer consumption concept, and the quality of the products. This essay will identify problems through the analysis of Starbucks' earnings multiples and operation ability. Find strategies to enhance the profitability of enterprises, which can enable enterprises to grow up healthily.
Hello, my name is Tao Chen, and in this part I will introduce the earnings multiple for cafes and do some analysis. First, what is the earnings multiple? The earnings multiple is an adjustment made to a company's P/E ratio that takes into account current interest rates. The earnings multiple is used to discount future earnings and allows investors to compare expected growth to an amount of money invested over the same period at current rates. And next, breaking down earnings multiple. The earnings multiple is similar to a discounted cash flow in that future earnings are rolled back to determine how much they are worth in today's dollars. Investors use the earnings multiple to figure out how much a company is worth today based on how it is expected to grow in the future. And the earning multiple of cafes, we take Starbucks, SBUX as an example. This picture is the details of SBUX in today, and we can actually see that the P/E ratio, also we call the earning multiple, is 13.92 today. And this picture is the historical data of SBUX. According to the picture, which shows that the price of SBUX in the last 10 years, we can see that in 2008 it gets the bottom since that there was the world financial crisis, and after that time it has a upward trend till today. One of the reasons is that Starbucks completely into Chinese market, and its product sales is increased year by year obviously. And next, the earning multiple of cafes. In general, a stock's earning multiple is low. The market price of the stock relative to profitability is low. Shows that the payback period is short and the investment risk is small. The investment value of stock is greater, whereas we get the opposite conclusion. The SBUX earning multiple, also we call the PE ratio, is 13.92 today, which means after 13 years, investors will get their invested money back in the case of the same level of profitability of the company. The PE ratio of Starbucks of SBUX is a little bit high in cafes, which means that Starbucks has higher risk than other cafes.
Currently, on the 9th of December 2016, Starbucks stock price is $58.65 and the earnings per share is $1.90. The earnings multiple, or the PE ratio, is calculated as the stock price divided by the earnings per share, which means Starbucks' current earnings multiple is $58.65 divided by 1.9, which equals 30.87. This has only slightly increased from 2015's earnings multiple of 30.64. 2015's earnings multiple changed significantly from 2014's, which decreased from 55.76. This was a result of the adjustment in the fair value of Starbucks Japan's equity upon its acquisition, which increased the earnings per share by 26 cents and caused the increase in the earnings multiple. 2013 was an interesting year for Starbucks, as the earnings multiple increased to 7,733. Their stock price was not the cause, as it was at a near record height of $77.33, but instead the cause was earnings per share. The earnings per share decreased to 1 cent per share, as you can see on the chart, which was the result of the settlement on litigation with Kraft Foods Global. This found Starbucks incurring a $2.8 billion operating charge. This charge reduced the earnings per share by $2.25 per share for the 2015 fiscal year. Starbucks simply lapped this litigation charge, which brought the earnings per share back to 1.35 and drove the earnings multiple back down to 55.76 in 2014. Before the litigation charge, in 2012, Starbucks had an earnings multiple of 28.51, which was slightly higher than 2011's 24.60. This increase was simply the result of improved sales leverage. This result was the same case for the year before, where Starbucks' earnings multiple increased from 21.09 in 2010, also as a direct result from improved sales leverage with the addition of certain gains in the fourth quarter of 2011's fiscal year.
Hi, I'm Yang Jiang. I will talk about the summary. 1. Starbucks P ratio is low. 2. The definition of earnings multipliers is mentioned according to the analysis of the stock price and the PE ratio. It shows that the investment value of SBUX is worth to investment. 2. The trade of SBUX is slightly increasing from the year 2010 to 2016. The lowest point is 7.733 period in 2013, and the top point is shown in 2014, which is equal to 55.76. 4. Analysis of the reasons for the rise and the fall of stock price. So this is my group presentation. That's all. Thank you.